Hello team, it's Sunday again, August 6th. I got time, so I will make a new video about price action concept. I looked at Bitcoin chart if I wanted to make a video, but no, I'm not going to talk about Bitcoin because these things is disgusting. So video of today is about inefficiencies, okay? And I use inefficiencies a lot in my trading plan. And maybe I have to say something like all these price action concepts that I explained to you in this playlist, they are all little things that I know about price action or that I use, not that I know, like that I use about price action, and none of them is literally like my trigger for an entry or a setup or an exit, okay? They are all confluences that I use together to give me bias or to make me convinced enough to take a trade, okay? Inefficiencies play a big part in my trading plan, okay? They are like huge. Like change of market structure is a big one. Inefficiency, for in my opinion, is big as the same level, okay? So for inefficiency, I mean a determined price level when there is a big inequality between buyers and sellers, producing an imbalance in price action. For example, look at this move up. Who do you think was in control here? Buyers. So this is an efficient move up because there are many fair value gaps, probably some volume imbalance. So today I talk about volume imbalances because they are like my favorite probably. The one I use the most are fair value gaps, of course, because they are most common. And this is the way I learn. I'm not saying this is all the inefficiencies available are this, like no. This is the way I learn. This is the way I try to explain to you. For sure, there are other inefficiencies, and you're welcome to try and test whatever you want. I don't care. I categorize them in three families. Let's say volume imbalances, which are the literally gaps in price, liquidity voids, which is when there is like just green candles, for example, and fair value gaps, which are the most common, and I will explain in future videos. So today we talk about this. And the volume imbalance gaps are not really common in Forex, or not as much as you see in indexes and stock market, especially Euro USD being one of the most liquid assets in the world. They tend to happen during weekends or big red news events. If the gap gets filled instantly rejected, they can offer a good continuation play. We'll see more example in the hindsight. Okay. First, I tell you the way I learned them from Michael. I don't know. He keep explaining them in a different way now. I think I saw some video where he called them macro, or I don't know, new acronyms, like new things. When I studied Michael back in the days, it was just like Sunday opening gaps. And for example, this was one of the most common way I learned them. Let's say this is Friday price action, no? Stops here. Monday open here. And you can say this is a gap, okay? An opening gap. The way Michael taught me and many other students back then, it was like, okay, if price action keeps going, when the volume imbalance is gap is retested, if it gives an instant reaction, means the price is balanced now, and you can do a continuation play. So take a long year, for example, Instead, if price does that, comes back down, fill the imbalance, then up and down again, he used to say like there is no meaning to come back again because the gap is filled. So when you are here, you can say that price is bearish, and maybe if you see something like this, you can do like a breaker play, and get in a short here. So basically, they behave pretty much like order blocks because an order block is like a price level when somebody buy enough to break the structure. This is the same thing if you think about. Somebody here bought enough that didn't even give time to sellers to participate, and they were just buyers, and they create a gap. So It's not exactly the same, but you can think like an order block because somebody here bought enough to to move the price so much that there was no counterparty. Okay, let's have a look. So, as always, you can see these things on different time frames. You know, I use a Saxo feed, but here there is an example on FX Open, which is also in Saxo, and I'm gonna show you because it's pretty nice and clean example. So I posted this example many times in my daily Euro USD analysis. So this is the volume imbalance to my eyes. A gap. This is a clean gap. Clean gap. Can you see? So when we were, well, everybody was bullish, happier when we were trading like I don't know, a few weeks ago, and I was like, okay, now the weekly volume imbalance is filled. It doesn't mean I go short blindly, but I have an extra confluence that tell me that maybe Plus exhausted the bullish momentum, and once I start to see confirmation from recent price action, I can get in shorts more safely than getting in shorts here just because I'm in a bearish order block, you know. So this was like a perfect example of the way to use volume imbalance. And of course, the bigger the time frame, the stronger they are, you know. So now here is fully filled, and you can say like, ah, okay, so now it's bearish. Well, I don't know, you know. I knew that once the volume imbalance was filled, there was a probability the price could reverse. Now I don't know if this one gonna win or gonna win the bullish weekly order block, you know. So who am I to decide that? Nobody. So I'm just gonna wait and see. Okay, let's check also on lower time frame like daily. Look at this. This is beautiful. This one was also in my daily review. This is a bullish order block. Okay, this one, this big candle. If you watch my old videos, I always explain that the big fat candle is the order block. Okay, so somebody here sold enough, took the lows, and then break the structure. Inside this bullish order block daily, there is this beautiful volume imbalance, which is a gap, an opening gap here, opening. Then they filled, but it was no bodies. It was filled just by the wick. So what happens when price return? Look how much time spends here. They work the area, they work, and then took off again. Okay? I don't think it's coincidence that price stops in this area so long before taking off. I think the volume imbalance meant that somebody here bought a lot to leave like a counterparty lag. I don't like to say like they gave time no seller to participate in price action here. So they defended the area. Once they came back, they defended the area. Okay, I don't use them only solely as a reversal area. Many times I use them just as a target, like I do with the fair value gaps. Like I know that there is a volume imbalance, I'm in a short, I say like, okay, you know what, fuck it, I'm gonna close here because there is more high probability here to have a bullish reaction than not. That's the way I use them. Let's go now to lower time frame to show you some more. I found out on Saxo. Look, this is a beautiful example. I think most of them are doing news on low time frame, especially, you know. So now I don't recall what was the 24 July, maybe some FOMC or something. So I see this volume imbalance, this gap. I mark out, look, here it gets slightly touched, slightly, and the reverse price. I mean, yeah, it's not a big move, but now we are on M15, so it's 30 pips move. If I would be in a long here, because I have bullish bias, I will be out in the moment we touch the volume imbalance. You know, now we retest it, fully filled, and then it doesn't act anymore. It's like completely filled, it's not relevant. So this is the way I use them. If I'm in a long, I want to get out once we touch it. More examples. I mean, I explain these things in my daily videos. This is another one. Well, this is really small. It's like 5 pips. Anyway, look. Imagine here you are short because you got bearish bias from this bearish of the block. I don't know, just fucking around. Just fucking around, giving example without real context. So I'm in a short here. I see there is a volume imbalance. I want to get out here. Okay. What happened? Price filled the imbalance. They kind of pushed and then dumped again. But for me, it was high probability this level. Same thing here. Well, this is this is a London open, 9 o'clock. Can you see here? 9 o'clock. So it's a nice one. When they managed to make a volume imbalance during peak hours, like London open, New York, like New York open, this kill zone. Imagine this moment in the day. It's like, do I have volume? I don't know if it works here. I promise you, I have no idea. Doesn't work. Okay, fuck it. Never mind. Okay, London Open and New York Open is when there is more price action ever during the day. So if during London Open they managed to make a volume imbalance, a gap, it means that there was really like a big bid here, a bid ask. It was a bit bearish move. Okay, ask and bid is like when you buy and sell. So I know that somebody here gonna defend the price once tested. So imagine that I'm long here with whatever order block that I have no idea, just no context here. I'm long here for whatever reason. This is the new. This is London Open the day before. This is Asia high. I wanna get out of here, out fully, myself. You wanna keep longing? Up to you. I'm out. Because I know that somebody the day before left a volume imbalance here and they don't know what they're gonna do. Maybe they're gonna send price lower, maybe they're just gonna get filled and keep going. I think, these were all my examples. Yeah, this one was pretty big. I think I remember this one. I'm sure if you go to another, let me see, 12 April. Oh fuck. Yeah, I knew it. Should have done that. Okay, so if you go on other feeds, I'm pretty sure that you don't see this one. I mean, many times Oanda and FXM, they filled it. I don't know why. Saxo is legit. So imagine somebody bought enough here to leave 40 pips of gap on euro, and this is New York Open. This is for sure like, I don't know, an FP or something like that. Okay. CPI, it must be like on New York Open News. So somebody here bought enough to leave such a gap open. This is a magnet, there is a big imbalance here. Once we got back down here, I don't want to participate anymore when we go. I mean, if I'm in shorts, I want to get out here, I want to get out. I don't know about you, I don't know. I say like, wow, imagine somebody bought enough here to create a 40 pips move up. Why I want to hope that this whatever bought here is not capable to push the price higher. Myself, I will be out. Well, this example is bad somehow because this is a market maker sell model, looks like, accumulation, distribution, and then they finally dump it. But if I'm in a shorts, I want to get out once we touch the volume imbalance, okay? Then look what we discussed before. They touch it, then it come down again, and then the price is bearish. What Michael taught me many years ago. So volume imbalance gets tested. Rejected initially, then we go down a bit again, and then probably here you can look for shorts as a continuation play because you say like, okay, this fucker is got filled and is still rejecting. So we go down. Anyway. Yes, this is the way I use them. I hope this video helped you. I also sometimes they're also like on M1 or so, but as always, the bigger the time frame, the more relevant they are. And that's it. I think next time we try to make a video about the liquidity voids and then fair value gaps, which are pretty much the same thing. It's just they are all inefficiencies. They got little differences between each other. But yeah, remember, use them as a confluence. Or if your system is based on volume imbalance and gaps, fine with it. Myself, I use them as a confluences. They are not trigger for my setups. I hope this video helped you, and I hope you have a nice weekend. And I speak to you tomorrow morning with a new Euro USD daily review. Bye.